everyone, you are watching Weekly Forex Report by Live Forex. From this video, you will learn the outlook for the main currency pairs. The US dollar remains strong. It is trading just below the highs of 2018 and 2019, as we can see from the chart of the US dollar index. However, the currency still is below the major resistance line, and it currently lacks momentum for a break to the upside. The market is driven primarily by concerns about global economic growth, which is slowing down, and last week a US yield curve inverted. In other words, yields on longer-term 10-year treasuries went below the yields on short-term 3-year treasuries. It means that market players are uncertain about the future, and many economists regard it as a sign of recession somewhere in a year from now or maybe more. As a result, the market sentiment worsened. However, still the US Central Bank, the Federal Reserve, is supporting the stock market, is supporting the risk-on sentiment, as the central bank removed the prospect of interest rate hikes this year at its meeting in March. And all in all, this cheap liquidity is supporting financial markets and limiting the upside of the USD. Still, US dollar remains attractive because other central banks conduct even more dovish policy, so this is why the USD stays at these high levels. Other topics which are driving the markets are trade talks between the United States and China. Last week, these talks took place in Beijing, and this week they will continue in Washington. So far, the picture looks optimistic, but still there may be changes to that, and probably the big decisions will come later than this week, although some announcements may still take place, so we will have to monitor the news. And another topic is Brexit, and we can have a look at the British pound versus the USD chart, and we will see that on the weekly chart the price action is taking place between 1.34 and 1.30. The market is swinging from one level to the other, so the situation remains volatile because one day we get positive news about Brexit, the next day we get negative news. The deadline, April 12th, approaches. This is the time given to Britain by the European Union to make some decision about Brexit. But we see that actually the almost 3 years that passed since the Brexit referendum still didn't let British lawmakers and British Prime Minister to somehow reach an agreement. And the latest news is that the UK Parliament seized controls of proceedings on Monday to scrap Prime Minister Theresa May's Brexit plan in favor of the one they can support. Last week, the British Parliament rejected 8 Brexit proposals. So on Monday, they will discuss different Brexit options, probably customs union, single market, or a combination of them. They will discuss the opportunity of confirmatory referendum, so a kind of Brexit plan versus no Brexit at all. And Monday's discussions will be non-binding. On Wednesday, there will be more discussions. And on Thursday, German Chancellor Angela Merkel will visit Ireland. So we can expect some big important comments. This week is obviously critical for the British pound, and if surprisingly some soft Brexit is accepted by the Parliament and the European Union, then the pound will likely jump to the upside, breaking resistance at 1.3215 and reaching 1.34 level. Some scenarios even say that we will get advanced towards 1.3550, where we find 200 week moving average, the important resistance level. If we see that no deal is possible and the possibility of a no deal Brexit increases, then we'll see a break below 1.30 towards 1.2770 and then towards 1.24 level on the downside. We have discussed the Brexit scenario for this week. Let's now have a look at the economic calendar at lightforex.com, because there we will see plenty of other events which will have an impact on financial markets. On Monday, China has released some PMIs and they were rather positive. The good Chinese factory numbers have cheered up the market a bit. Also on Monday, there will be European flash inflation figures. There will be US retail sales and US ISM manufacturing index, important indicators, and the market will be watching these pieces of US data in order to see how the US economy is doing. This is especially important after the Fed shifted to dovish policy. On Tuesday, there will be a meeting of the Reserve Bank of Australia, and also America will release durable goods orders. On Wednesday, Australia will release retail sales and trade balance figures, and there will be services PMI from Britain, while the United States will release ADP employment report and ISM services PMI. On Thursday, we will get the minutes of the European Central Bank's meeting and also Canadian IV PMI index. And on Friday, it will be the first Friday of the month, so America will release non-farm payrolls figures. The last reading was rather weak, only 20,000, and according to the forecast, American economy gained 175,000 jobs in March. However, growth of average earnings is expected to slow down, so now the forecasts are mixed, and every indicator here is important. So we'll see what is happening with American economy and whether the market has become too convinced with the dovish approach of the Federal Reserve, or hope remains and the US economic data may be better than the market expects. Let's return to the charts, and it's time to gaze at euro-dollar. We can see that all attempts of the single currency to recover meet resistance in the area of 1.1450 and 1.15. This was what has happened 2 weeks ago, and last week was also bearish for the euro. The market is pessimistic about Germany's economic slowdown, about problems in Italy, and the European Central Bank sounded cautious. This also has negative impact on the euro. Support is still in the area of 1.12, and it guards euro-dollar from deeper declines towards 1.10 and lower. On the daily chart, we can see resistance levels euro-dollar will face as it tries to recover. And we can assume that the situation will remain more or less the same. Euro-dollar recovers to the area of 1.13, 1.1350, and there it will meet resistance and turn down once again, because neither the euro nor the USD has dominance at this market, so we remain sideways with the slight bearish bias. Dollar yen recovered from support around 110, and is approaching resistance at 111.50, where we have the resistance line connecting March highs, and it needs to overcome this level to get an opportunity to get to 112.15 and 113.15. However, it doesn't seem that there is a lot of momentum, and much will depend on the quality of the US economic data this week. If it is good, we will test these levels. If the data disappoints, then we get back to 110 and breaking this support to 109 and 108.20 mark. Getting to commodity currencies, Canadian dollar started to strengthen versus the USD, and US dollar Canadian dollar reversed down from resistance around 1.3450. Support and the target levels lie around 1.3225. Canadian dollar is supported by the positive dynamics of oil. Here is the chart of Brent oil, and we can see that here the prices move towards the 200-day moving average in the area of 69.60. The next level to watch will be at 70.75 mark, and then 73 level. The oil is supported by different supply problems and by the fact that large oil exporters seem committed to limiting their output, which also diminishes supply. Other commodity currencies like Australian dollar is near resistance, and tomorrow there will be a meeting of the Reserve Bank of Australia. As the Bank of New Zealand sounded dovish and provoked a sell-off in the New Zealand's currency, we can imagine that the Reserve Bank of Australia will do something like that. And as a result, we see the risk of the currency getting back to 0.70 and then testing lower levels around 0.6950. The major resistance is at 0.72. New Zealand dollar managed to get up from the support line, formed a bullish engulfing pattern here, and the recovery will meet resistance in the area of 0.6870 and 0.6910. Another interesting situation is with Turkish lira. Their local elections took place on Sunday, and the party of President Erdogan was successful in rural areas but lost the capital and cities along the Mediterranean. And lira is on the downside because of concerns of populist policies, and we see that volatility has spiked substantially, so we can expect that further big moves will take place in this currency pair. Finally, gold went down from area of 1,320 and went down below 1,300. So it is kind of vulnerable for decline towards 1275 and 1250 in the upcoming trading days. This is all for today. Thank you for your attention, and visit lightforex.com and trade Forex with Light Forex.